Speaking of real dollars, to your knowledge, what's the most expensive piece of art you think that's ever been purchased?
That's public, certainly that we know about. 7 years ago, Leonardo da Vinci painting sold for $450 million.
What?
CJ, I was there when it sold, and the market, everyone in the audience originally was expecting to fetch about $100 million, which is, listen, it's a huge number. And when the bidding got to 200 million, people were already losing it. And then at one point, the bidding increments got up to 30 million per bid. And that's when people started spitting out their champagne. It was totally wild. And then it topped out at 450.
450. I mean, you have to be liquid probably. We're talking probably hundreds of billions in order to buy that.
That would be right.
Is this thing on?
Yesterday's price is not today's price.
Welcome back to the Run the Numbers podcast. What follows is a conversation with my buddy, my pal, Nigel Glenday, the CFO of Masterworks. Masterworks makes the art market more accessible to people like you and me who can buy into shares, fractional shares of, Picassos that are out there, Rembrandts. And he tells us about securitization. The world of securitization is like totally foreign to me and also extremely interesting because you can basically package up anything you want and make it a financial asset. From shipping containers to railroad cars, you can securitize anything. And so we talk about securitizing art and how they turn a physical painting into a stock. Nigel tells us how they service their investors because I can imagine that managing hundreds of separate investment entities is a big lift. And data-driven decision-making. What I love about this conversation is I didn't realize how much data there is on the art market. Everything is written down when it's bought or sold, and they can help to value what's out there on the market. And finally, we talk about scaling Masterworks. It's a company that's had quite the run. How does the way you run the org change when you're going from just finding product market fit, he was there for that, to actually leaning into new ways to grow and distribute your product. All this and much, much more after a short word from our sponsors. And if you can please give this podcast 5 stars for your boy, I will love you. Please give this 5 stars. Trust isn't earned, it's demanded. Whether you're a startup founder navigating your first audit or a seasoned security professional scaling your GRC program, proving your commitment to security has never been more critical or complex. That's where Vanta comes in. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks, like SOC 2 and ISO 27001. Centralized security workflows, complete questionnaires up to 5 times faster, and proactively manage vendor risk. Vanta not only saves you time, it can also save you money. A new IDC white paper found that Vanta customers achieve $535,000 per year in benefits. And the platform pays for itself in just 3 months. Join over 9,000 global companies like Atlassian, Cora, and Factory, who use Vanta to manage risk and improve security in real time. For a limited time, our audience gets $1,000 off Vanta at vanta.com/metrics. That's vanta.com/metrics for $1,000 off. Here's a question. Do you feel like you're wasting time and energy on contract renewals or tracking shadow IT spend or, this is a bad one, explaining rising software costs to the board? Truth is, traditional spend management is broken. That's where Tropic comes in. Tropic is an intelligent spend management solution that consolidates your spend data and processes into one unified offering, enabling insights and decisive action. It doesn't just show you where the problems are, it helps you solve them. From spotting hidden optimization opportunities like duplicative spend to automating those painful procurement workflows to giving you the best market data that turns every vendor negotiation in your favor. I'm a Tropic customer myself. I've been using them for over a year, and I love their price checks. They allow me to see if I'm getting a fair market deal instantly. And I'm proud to say that I am no longer using my email as our company's contract repository. I've got every document and renewal neatly organized in my Tropic portal. Isn't it time to turn spend management into your competitive advantage? Visit tropicapp.io/mostlymetrics to see what's possible when intelligence drives your decisions. tropicapp.io/mostlymetrics. Nigel, it's a pleasure to finally welcome you to the podcast.
Hey, CJ. Thanks for having me on.
So I got a hot one for you right out the gates. What is your favorite art heist movie?
Oh man, it's probably the one that's going to be the top of everyone's list. I mean, it's going to be the Thomas Crown Affair. Although I haven't seen the original one, and I definitely joke around the office sometimes we should securitize dogs playing poker. Although if antiquities counted, it's definitely Indiana Jones. I think
we can broaden it. We can broaden it.
Totally. And I think maybe the Ocean's movies have an art heist portion to it too. The tricky thing with art heist movies, though, is that it's usually the starting point of everyone's knowledge about the art market. And so in my seat, I have to constantly battle this. So whether it's like your accountants, your auditors, your bankers, they're all going to start basically just having watched the Thomas Crown Affair before they've gotten to a diligence call with me. So forgery risk, how we're protecting the art, lots of preconceived notions about the art market. I mean, that's where everyone starts. So I feel like sometimes my job is just overcoming the Thomas Crown Affair idea in someone's head. I mean, and some of the takeaways are fair and many are not.
That's so funny. It's like as if you worked like say at a bank and you had to start every conversation with like, we don't get robbed that often, believe it or not.
Exactly.
Well, to your knowledge, and I know that you come from a background of art houses that did auctions, and you're like my personal art broker, I feel like.
Well, there you go. Well, I started life as an investment banker. I stumbled into this art world, actually, I'd say almost 10 years ago. I was a specialty finance banker and worked across all kinds of kind of niche-y finance businesses for a long time before finding my way into businesses that were oriented around the art market.
Did you know that this was like an option to do finance within the art world when you first started your career?
No, definitely not. I'd been a banker for about 10 years, and then one of my first bosses was running one of the biggest financial services funds for a large PE firm, and he was a big art guy, and he wanted to build a business that was very similar to a finance business that Sotheby's runs. So Sotheby's, a lot of people don't realize, actually has a big financing arm where they are lending money to their clients collateralized by their artwork. It's basically mortgaging their artwork, and it's a really fascinating business that they have. So the company I helped build prior to this was one that was basically trying to professionalize that service. But it makes perfect sense. I mean, art, it's a huge market, it's global, and there are real dollars at play.
Speaking of real dollars, to your knowledge, what's the most expensive piece of art you think that's ever been purchased?
Well, that's public, certainly that we know about. 7 years ago, Leonardo da Vinci painting sold for $450 million. CJ, I was there when it sold, and the market, everyone in the audience originally was expecting to fetch about $100 million, which is, listen, that's a huge number. And when the bidding got to 200 million, people were already losing it. And then at one point, the bidding increments got up to 30 million per bid. And that's when people started spitting out their champagne. It was totally wild. And then it topped out at 450.
450. I mean, you have to be liquid probably. We're talking probably hundreds of billions in order to buy that.
That would be right.
That's crazy. That's great. Where was it sold? Where were you at the time?
It was sold at Christie's.
Okay. The auctioneers there, do they have as official of a voice as I think they would, like in the movies?
Yeah, and it's funny. There's like a whole bunch of academic research about the effectiveness of auctions and auctioneers in particular. So I guess, yeah, having a refined British accent and being able to be, amicable up there on the podium makes for better auction outcomes.
Everything sounds more official in a British accent.
Well, auctions for a long time, I think, were just, it was like a wholesale operation for a long time. And then it was really in the 80s that these auctions became kind of, black tie events where, positioning and all of that really, really mattered. So it's actually a relatively recent phenomenon.
Well, maybe that's a good segue. Maybe you could just talk about art as an asset class more broadly. What's the history of buyers and sellers there? Well,
the good news for a business like Masterworks is the art market isn't anything new. So, unlike NFTs or collectible cards or lots of niche collectibles, I mean, I don't have to convince anyone that paintings are a thing. It's a market that's widely known. It has global mind share. It regularly makes front page of the Wall Street Journal, New York Times. And the two largest auction houses have been at it for, over 250 years. So it's definitely nothing new. And what's interesting about this market in particular, which maybe some people realize, many don't, it's large, right? So there are a couple different ways to come at it, but the best we can see is about a $1.5 trillion market in terms of total assets. It's global. The U.S. has dominated that market, but artwork sells all over the place, so London and Hong Kong. It's data rich, right? Because half of this market trades at public auction. So you could buy art, again, at Christie Southey's public auction. We know the prices. And then you've got the major art fairs like Art Basel and the like, where things trade privately, and you got a little more opacity around prices. But that auction segment throws off a lot of data, which becomes really important for a business like Masterworks, which has to construct an investment thesis in a data driven way.
The history makes sense. Like, there were people trading art in the times of Jesus and Roman emperors. Like that's nothing new. The data rich part really surprises me, though. I would have thought that this was on pen and paper somewhere in some of these desk drawer.
Well, actually, you're not far off. Originally, I mean, the data in this market is incredibly fragmented. So while the good news is, yes, there's a lot of data density, the bad news is none of it is consolidated into a Bloomberg terminal. Going back to my investment banking days, everyone gets so used to all their data being pre-canned. I could just pull it off of Cap IQ or Bloomberg or Thomson Reuters. There's nothing like that. So collating and dealing with our data is basically one big data normalization exercise. But we realized, at the outset, that it was fundamental if we were going to construct what amounts to an investment thesis around the market. And what the data told us, and what we had the hunch, is that the asset appreciates in value, right? I mean, that's what you have to conclude at the end of the day, right? And so we were seeing the contemporary market in particular appreciating, over 11% annually over kind of nearly 3 decades. So those were the kind of the basic things we were observing in this market that really helped us conclude that, okay, there's a strategic asset here. The people who are participating in it now are individuals, right? It's this person that's paying $450 million for Leonardo, right? But how can we create some sort of mechanism that allows investors, so whether you're an individual or professional manager or just an investor broadly defined, to gain exposure to this asset and add it to an investment portfolio in much the same fashion you would other investments. So that's kind of where we started the business.
You said 11% annually for 3 decades. That's also higher than I expected. Does the art market in general correlate or perform like other markets, or is it completely its own beast?
It definitely marches to the beat of its own drummer, and there are a couple things behind that. So first of all, it's global, right? So that means that macro shifts in one region tend to get offset by, shifts in other regions. The U.S. has been a driving force in the art market throughout. China used to be a very big bid into the market, a bit less so in this market today. It's a market that's been dominated by the ultra wealthy. That population has been on a secular growth trend for decades. And, one of the big wild cards around the market is estate sales. So major sales that come up are estates after people pass away. And that is by definition non-correlated. And you put all that together, you've got, again, an asset that really doesn't move quite the same way as other traditional markets.
But it sounds like art holds its value. Like, could it be used as an inflationary hedge?
It definitely has some inflation, some interesting characteristics with respect to inflation. I mean, when you look at correlation, the closest other asset tends to be gold, which has similar inflation protection characteristics. And it makes sense. I mean, art is fundamentally, it's a tangible asset. It doesn't have a cash flow attached to it, which means you don't have a cash flow denominated in a currency that can be inflated away over time. And it's mobile, right? So, if I buy a Picasso in New York, that can readily be sold in London or Hong Kong, in another currency. So the cross-currency nature of the asset gives it another degree of resilience.
That makes sense. When people ask, should I compare this to the S&P and the returns there? Do you say like, yes, that's a nice benchmark, but you should really look at art performance compared to, I don't know, real estate or something else? Or how do you explain that?
We definitely point to people to a variety of different benchmarks, whether it's PE, real estate, other benchmarks that have a similar liquidity profile. Certainly the reality is for our self-directed investor base, their opportunity cost is the S&P 500. That's just, if they're not going to do anything, and if you think about what's our biggest competition for the business, we don't have any direct competitors in the business other than customers just doing nothing or just sitting in the S&P. And in some ways, that's the S&P is always the opportunity cost for any investment product. And certainly in a market like today, where the S&P is up, I don't know what it's up about 25% so far this year, that could be a headwind to nearly anything that is not the S&P these days.
We recently moved. I was telling you, Nigel, and we had dinner a while back, and I was saying I was going through, moving boxes everywhere and unpacking my house and trying to wrap my head around why couches are so expensive. I think they're made of gold. But someone was saying, like, how do you think about your real estate portfolio? Or how do you think about, like, the cost of what you pay for your house? And I said, like, I understand how much you pay for it and the, like, interest rate that you may pay on the mortgage. But there's also the less... I don't know. It's like a softer benefit of I just enjoy living there, and there's a comfort factor to it. There's an enjoyment factor to it, and I imagine that there is a part to art as well that you can't directly price in and be like, well, that's worth an extra 2% because I enjoy looking at it.
Yeah, I mean, I guess your analogy in the corporate finance world, it's goodwill
there we go.
that you're booking, right? And it's I stay with your house, and I think a lot of economists that look at housing prices will say the same. It's housing gives you utility, because it'll appreciate in value. You also get a very direct value with your house. You get to live in it.
Yes.
So art is much the same way, and there's a lot of academic research on the same token that the value of art is my future expectation of its resale value. And then the variety of different ways to phrase it, but one way is the emotional dividends, basically that I will accrue from owning the art. That could be anything from, I like this in my house, I have a particular nostalgia to the imagery, what have you, but it imbues some degree of non-financial utility to the user.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Does your revenue recognition process feel like a total guessing game? Step right up and pick a card, any card. You're not alone. Revenue accounting is getting more complex, especially with subscription models, usage-based billing, and evolving compliance standards. Woohoo! RightRev is here to help you gain control over your revenue accounting. RightRev automates the revenue recognition process from end to end. Whether it's multi-element arrangements, subscription renewals, or complex usage-based contracts, RightRev takes care of it all. That means fewer spreadsheets, fewer errors, and more time for your team to focus on growth. Customers like Snowflake, Logic Monitor, and Epicor chose RightRev to manage their high volume and complex revenue accounting. CFOs can see the bigger picture faster without being held up by their team's reporting nightmares. You know me, I'm a business model fanatic. And don't get me wrong, I love all the evolutions. We've got self-serve revenue, usage-based revenue, and now even success-based revenue, you name it. But that doesn't make it any easier for us bean counters on the back end to keep score. RightRev is like a cheat code for staying ahead of revenue complexities. So you're ready to transform your revenue accounting? Visit RightRev.com to schedule a demo. That's RightRev.com and tell them your boy CJ sent you. RightRev, modern revenue recognition simplified. Oh yeah. Ready to plan confidently, close faster, and report with accuracy? Here's what sets Planful apart. Imagine purpose-built solutions for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. It's easy to implement Planful in just weeks with minimal IT involvement, enabling seamless collaboration across your organization's key financial workflows. Best of all, Planful grows with you. Its unmatched scalability ensures that no matter how fast your business expands, Planful can keep up. See why over 1,500 customers worldwide choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Visit planful.com/metrics to see how you can elevate your team this year with Planful. They will hook you up. It is planful.com/metrics. Tell them your boy CJ sent you. Planful.com/metrics. Well, if you've listened to this podcast before, you definitely know that I think it's cool to be a fan of business. I'm obsessed with researching how the best companies operate and specifically how they manage their money. And I've learned that a company's financial stack can make the difference between world domination and obscurity. That's why I want to tell you about Brex, because I want you to rule the world. Brex is an impressive financial services and software company that has grown immensely since it was founded in 2017. In just the last year alone, Brex accelerated customer acquisition by 50%, with 91% growth in enterprise customers. And there's good reason that over 30,000 companies from startups to enterprises have flocked to Brex. Brex offers the world's smartest corporate card on a full-stack global platform that is everything CFOs need to manage their finances on an elite level. Plus, they offer modern banking and treasury, as well as intuitive expenses and accounting automation, bill pay, and travel. Wow, it's all on the roster whenever you need it. Brex grows with you. CFOs tell me all the time that Brex makes it easy to control spend before it happens, automate annoying tasks, and optimize their finances. Because listen, at the end of the day, Brex helps them make every dollar count. So if you're a fan of smart businesses too, check out Brex at brex.com/metrics. That's brex.com/metrics. Emotional dividends was the phrase I needed, Nigel, when I was trying to lug all my baseball cards from age 12 into the new house, and my wife was looking at me side-eyed.
There we go. I'm glad I gave you some new vocabulary.
Let's talk about securitization, because I've gone down a rabbit hole and I haven't come back up yet. We were talking to Alex Song. He was the former VP of finance at Ramp, and he had this crazy career where he was helping to securitize all sorts of wacky assets, like shipping containers, railroad cars, specific boats from like mining expeditions, rough diamonds. And it made my head spin that you can basically turn anything into like an asset class. Did you have that realization with art at all?
Oh, well, I definitely had the same experience as he did as a banker. So when I was working in especially finance investment banking, it was exactly that. And this was pre-financial crisis. And I worked with business that were, some of the first things I did was securitizing aircraft, rail cars, containers, equipment. I mean, I remember building a model for rail car leasing business. And I had separate tabs for the hopper cars and the tanker cars and all kinds of things I actually didn't know anything about until I had kids much later. And we're always, I have two boys and, university.
Buying train sets?
Into trains. Yeah. So, it's where your banking career finally actually comes in handy. But, at the end of the day, you can securitize anything that has a cash flow. Because when you're securitizing aircraft and rail cars, what you're really securitizing is the underlying leases for those businesses. So
can you say more about that? Because I thought it just stopped at mortgage-backed securities, and like that one made sense because people pay down their mortgage. Are you saying that people lease like a rail car and then you're basically getting the payment stream? Is that what you're getting access to?
Yeah. So if I'm in the if I'm in the rail business and I'm going to get way over my skis here, or if I'm in airlines are a perfect one. If I'm in the airline business, all these airlines are leasing their planes. They don't actually own the planes in those cases. So you've got entire businesses who are separately capitalized businesses that are in the business of making the capital investment to buy the plane and then leasing them to the end user. And then they'll securitize those leases into bonds, and they're a great income cash flowing asset.
Well, tell us about securitizing art. Are you turning a physical painting into a stock essentially?
Yeah, that's right. So it's a little different than that. You're securitizing, a real asset. So it's more like securitizing, say, land or, a timber forest, where you are generating cash on the future resale of the asset. So that's exactly what we're doing. The other, I mean, just on the topic of bonkers things to securitize.
Oh yeah, please. I could do this all day.
I have seen securitizing racehorses was, I think, my favorite.
Really?
That I've seen. Yeah. There's another business not totally dissimilar from ours that's out there. And I've got a small love of horse racing. And so that's one of my favorite I've seen. Athlete contracts is another one, actually, I've seen too. That's pretty wild.
How does that work?
So you have someone that's got a long-dated contract, and they basically can get an upfront lump payment on that contract. And then as their contract pays out, it goes to pay down an investment contract.
I've also heard about securitizing cell phone towers.
Yes. Yes. And I think that's the same leasing model, but definitely going to get way over my skis on that one.
On the racehorse one, is that because they stud the horses, and if they win, it's more I don't know, that horse becomes a star?
Yes. So effectively the value of the horse will go up over time. And then there you do have cash flow because you have prize winnings.
Oh, that's cool.
Along the way. I think you had one of these horses actually won one of the Triple Crown races or the Kentucky Derby or the Belmont. It's pretty interesting.
Is that classified as an alternative investment?
Oh, definitely.
So back to securitizing art. Are you taking physical custody of the paintings?
Yeah, that's right. So yeah, the business does seem pretty simple, kind of outside looking in, but then we wind up having a lot of kind of moving parts underneath the hood. So we own the asset. So we diligence, we acquire, we manage, and we eventually resell the asset. And what's happening is each painting is then being acquired with its own special purpose vehicle. In this case, a Delaware LLC. And that Delaware LLC, so just a company, and that company then engages in a securities offering that can sell stock in that company to investors. So what investors are then buying is the stock in the company whose sole asset is the painting.
Got it. And you were saying that it's based on the future resale value. That sounds like there aren't cash flow. I mean, it's not like a business that's out there spitting off cash flow now. How do you market to market? Do you have to value it ongoing, or is it just at whatever the last price was at and then the market determines it?
Yeah. So what matters ultimately in the end is our realized prices when we sell. We do mark the assets otherwise quarterly, and you've got again a large market that trades. So Masterworks as a business happens to be in the contemporary art market, which is the largest segment, and it's the one that has the most transaction volume. And
what's contemporary for people who don't know much about art like me?
Yeah, so if you can think about contemporary art as basically everything that's been made over the last 70 years.
Okay, right. So like after World War II.
After World War II is going to be all your paintings. So certainly Jackson Pollock kind of onwards. I'm trying to think of artists that are certainly would be kind of household names.
Got it. That's interesting how different classes trade more frequently than others.
That's right. Mostly because new collectors and new money will tend to come in, art that is of their time and that is more recent. So, contemporary art has been a segment that has appreciated more so than others. Even though, I mentioned at the top of the show, the Leonardo da Vinci, which is obviously a highly historical painting, commanded such value. That segment, which is generally called the old master segment, doesn't tend to appreciate nearly as much kind of on a segment basis. Although you do get these just crazy outliers because those Da Vinci's, you're in like Indiana Jones territory at that point where you're just trying to find things of just like insane rarity that are priceless effectively.
Speaking of being priceless, how do you know then when to sell? Because at some point you have to have some sort of a liquidity event, right?
Yeah. So we are constantly monitoring the market. So we have a whole separate arm of the business that is just engaged in selling our portfolios. So we, in some cases, will hold paintings for as short as 1 to 2 years, and in other cases could be as long as 10. So the framework is very much like a PE mindset. It's opportunistic. We'll wait to see major events in an artist market. Could be a major show that's come up. It could be a record price. It could be some other catalyst like that is similar that helps drives pricing up and then drives more interest around that artist. And so those are the moments we look for to be able to monetize.
Nigel, this is kind of morbid, but doesn't an artist dying make the price go up usually?
What's interesting is the academic research shows that it's actually before they die. There actually is what's called a death effect. That actually happens beforehand. I guess to make it equally morbid, it's sort of like you buy on the news and you sell on the.
What happens with rap albums and certain artists, like all their stuff after?
I mean, again, in a morbid economics, analogy, the supply of the artist's work becomes fixed at that point. And something very interesting happens in that supply will actually tend to decline over time. So I mentioned Jackson Pollock, right? So, he's obviously in the canon of art history, and many, if not all, of his masterpiece works get gifted to major museums, which tends to dwindle down the remaining works that are available in private hands. So this Da Vinci that sold, I mean, listen, I'm not an expert on it, but you could debate whether it's his best painting. I mean, certainly you wouldn't call it his masterpiece, but it's one of the only ones that's available in private hands. So it's that scarcity value that winds up driving value.
Who was the private equity guy who during COVID was buying up a ton of art, and everyone thought that he was like keeping the Magna Carta to himself, but he was actually gifting it to museums?
Oh, you have a number of folks that are like that. I mean, David Rubenstein,
it was him. Yeah,
of Carlyle, has been very active, particularly around Americana and historical documents for sure. And
the museums that hold them, is that usually the property of the museum, or is it usually like held in I don't know, not on layaway? They're like storing it there almost.
Yeah, I mean, they have two models. I mean, you can lend paintings to museums, a long-term loan, and that's something that Masterworks has done, by the way, too. I mean, we
oh, that's neat. Then you could go see it. Like, I own a piece of it. I can go see it somewhere.
Exactly. It's very cool, and it's really something we haven't done nearly as much of to date that I want to be doing going forward. So we had some of our paintings in major retrospectives out in LA. We had something at the Van Gogh Museum in Amsterdam. So those are great opportunities, I think, to, for our customers to really experience and have direct experience with the collection. So we want to be doing more of that. So anyway, to answer your question, you've got these long-term loans, and then you have outright gifts.
Got it. And speaking of the different models that there are for art ownership, I want to talk about how Masterworks makes money in your business model. I'm such a business model dork, and like this one, I was like, I got to sink my teeth into it. So how is it? Like, what are your revenue streams?
So again, like a lot going on under the hood. So you can think about a business as having kind of two primary, arms. There's an asset gathering arm where the business raises new assets. So that is marketing dollars, out into the universe, driving users to our website, and we convert those leads into prospects through our financial advisor arm. So we've got financial advisors who are well versed in our investments and are talking with all prospective customers about their financial profiles, suitability, and then ultimately building a portfolio with them. So that's kind of asset gathering. And then two is the asset management arm. So that's where we're buying and selling art and the whole kind of securities wrapper I described that we created around them. So that starts with research. So we talked about data. So compiling all the data around the market, right? That informs what we're buying and adding to the portfolio, and then ultimately what we are selling. And then you've got all the shared services alongside that make that all possible. So from all that, we earn an upfront margin when we securitize a painting. So you can think about that as an origination fee that covers everything we need to do to go from physical painting to stock. So that diligence, buying the painting, setting up the vehicle, using the platform to gather assets, kind of art advisory platform fee, all wrapped into one. And then we earn a management fee to manage the vehicle over time. And then a carry on the eventual sale of the painting. So it aligns us with the eventual outcome with investors. And then we have what you can call your kind of professional service fee line item. We've got some ways we can earn revenue through guarantees we do with the auctions when we buy paintings, and also some advisory fees as well.
That's super cool. It's kind of a mix of a private equity fund model combined with like a brokerage transactional model.
You've got a few different models all going on under the hood at the same time. And one of the reasons for that is no one's built a business quite like this, not only around art, but just managing what amounts to micro securitization.
That's what I'm thinking about. I'm like, this could be applied to some other asset class out there.
So I would love to basically offload big portions of this to other service providers, but there are just none that are out there that can meet exactly our use cases. So we've really just by force of necessity had to become kind of this degree of vertically integrated where, you've got the element of asset gathering, you've got the asset management, you've got kind of managing the whole asset from soup to nuts. And then we also manage with a third party a trading platform as well. So that functions as a way to offer interim liquidity for our investors. So we've kind of had to build in all those features, under one platform.
That's crazy. You basically had to build your own operating system for this to work.
That's right.
Nigel, I was thinking this could be applied maybe to like artists selling the masters of their music work.
I mean, music royalty securitization is a whole nother landscape. So that's out there, and there are definitely businesses that are doing that, and that's a whole unique market in and of itself.
How are you servicing your investors? I can imagine managing hundreds of separate investment entities would be a big lift.
Yeah, it is, and this just dovetails to the last question. I mean, we've got just over 450 paintings now, so that means 450 vehicles.
Yeah.
Each of which have a few hundred to a couple thousand investors each. And the whole thing totals up to about $1 billion in total asset value. So there's that. And then, art is global, right? So it makes sense that, the investor base winds up being global too, just because there's global mindshare. So we've got investors in about, 130 plus countries. And because these are micro securitizations, we've had to build what then we sort of realized after the fact was our own fund administration business, in-house. So that has presented lots of really interesting business operations challenges to overcome in a business like this that have absolutely nothing to do with the art per se, although that's always an interesting overlay, but everything to do with how do you make a micro securitization available in an alternative asset, by the way, available to self-directed investors, on a global scale. So what we've done covers payment operations. You got to get payments in, you got to get payments out, you got to manage the cap table. All of these entities they're also audited and they have SEC reports. So there's a lot we've had to do to make that all function.
I thought my cap table gymnastics would be bad. You essentially have to do it for 450 entities.
That's right.
Nigel, we had talked about data gathering and like this proprietary bed of data that you're able to get insights into. And on the show all the time, we talk about 3 buckets of data: financial data from the ERP, sales data from the CRM, and then production data from the company's actual product. I'm curious if you can speak to the data that you have on the market and then how it informs what you're buying and selling.
Well, what was so important to realize was just to get data, period. Because if you don't have data on the asset that you are trying to build an investment thesis around, we were never going to find product market fit within the real investor community. I mean, maybe we could find customers among art enthusiasts and kind of early adopters. But if there was going to be broad adoption, I think it was really all about how are we going to build a compelling data-driven investment case. So what we wound up doing early on, because I mentioned all the auction data is just so insanely fragmented, is we were poring over physical auction catalogs. And actually this was about 5 years ago, and our head of auction acquisitions at the time found this treasure trove of physical auction catalogs that had all of the historical sales going back decades, including all their prices. And we had interns poring over that for nearly 2 years to build the initial data set for our indices. And once you have that data, then that's what allows you to build an index, right? And even index construction is actually a really interesting topic in the art market because, right, unlike stocks, these aren't homogeneous assets, right? All these are characteristic driven, right? Paintings are different sizes, they're different colors, and one's different than the same. I mean, you can look at all Picassos, but every Picasso is different than the next. So what do? There are a whole variety of techniques that can wind up controlling for characteristic differences. It's very similar to how indices are built for real estate home price appreciation. The Case-Shiller index probably being the most notable that listeners will be familiar with. So that was number one, was just, can we build indices around the art market to just convince ourselves that we've got an asset that appreciates. So that was really the top-down kind of data exercise that was necessary to start the business. And then from there, we did more of a bottoms-up exercise, which is then understanding within each artist's body of work, how have those artist markets appreciated or not over time. And that becomes really important then from a tactical standpoint in determining what it is we're buying and what it is we're selling. And I think since then, that was, what I'm recounting is kind of what we did 5 years ago. We've become one of the largest buyers in the market, and we've seen, I looked at the numbers quickly before I hopped on. It's, over 20,000 artworks. It's like 30 billion in total value. So we've seen a big swath of the market, and we've enriched that data with a lot of our own market intelligence, just having interacted with a lot of these objects. And that gives us a really rich data set to add to a lot of the public market data that's already out there. So it helps us understand price appreciation, volatility, risk-adjusted returns. We show a Sharpe ratio to investors, right? And the name of the game, CJ, is how can I translate this market into frameworks that the investing public can understand? Because again, everyone's coming at this with a Thomas Crown affair kind of lens, and a lot of preconceived notions. And really the name of the game is, how can you help educate, stakeholders across the board? Obviously, our investors are customers, but that includes, auditors and bankers and everyone that the CFO's office will always interact with and understand, well, these assets can actually be valued much the same way that other assets can, right? It's a comp-driven exercise. We've all spread comps on companies. Well, it's not entirely different with art, right? You're looking at comps for a company based on its market cap, based on its business mix, based on its geography. Same way with art. I'm looking at art based on its artist, size, dimension, other physical characteristics. So it gives you a little bit of a taste of kind of what's happening from a data perspective on the art side.
Yeah, because I wouldn't even know where to start with the characteristics outside of like year of origination of when it was painted and then the artist, because people probably try to create their own comp sets in their mind. And like you said, you have to make it so this data is actually an on-ramp to educate people to the structure of how to look at it.
Yeah, that's right. And if you get a chance to breeze through the website, you'll see that, we make available indices that help people understand the historical appreciation rate of every object, right? So if we have a painting that we're adding to the portfolio, we want to look at every painting that basically looks like this one based on certain criteria. What are things that are the same size? What have been created at the same time? Clearly by the same artist. Maybe the imagery is the same, but it's a defined set of characteristics. So it's not totally subjective. I mean, that's a very common misnomer that sort of the valuation of art is totally subjective. I mean, there are defined characteristics that have transactional data, historical transaction data, attached to it that help you infer prices for anything today. And in our case, also appreciation rates for those objects.
Let's dig into valuation there, because a lot of people out there may say Jackson Pollock, it looks like he just threw paint against the wall. And they're like, oh, well, the valuation must be in the eye of the beholder. You're saying it goes deeper than that based on being able to look at the data and the comp sets. Like, no, there is actually a way to place a value on this.
Well, absolutely. I mean, it's a comp-driven exercise. I'd love to apply a DCF model to it. And I mean, theoretically, your DCF model will be, again, as we talked about at the top of the show, it's the present value of the expected future cash flow on the painting. So in English, that means, my present value of the probability of what the painting will be worth when I go to sell it in the future, plus the present value of my emotional dividends, which is like, the goodwill I'm willing to pay just because I like it. I like, it resonates with me. I might want to put it over my couch, whatever. But the simple way to think about it is it's a comp-driven exercise at the end of the day. And you get a Jackson Pollock and it's paint splattered on canvas, but you're going to look at every other Jackson Pollock that's also paint splattered on canvas that people have bought, and you're going to use that as your benchmark.
That's a clip. That's amazing. And there's one other piece of data that I wanted to touch on, because you allow people to trade on the platform, right? So you have platform transactional data as well.
Yeah, we do. And the trading market is interesting. The business really hasn't evolved as a trading centric business. And I think there are a lot of businesses maybe similar to ours in the past, and certainly during the crypto kind of era, or at least the last iteration of it, that I think were more trading centric in nature. For us, trading is a means for our investors to seek interim liquidity. We have an asset that is effectively, it's an alt. It's an alt that has a private equity-like cash flow stream attached to it. And for a self-directed investor, there needs to be some means of interim liquidity, and that's what trading avails. And it's actually why we started our our quarterly valuation exercise early on, was to be able to kind of strike an estimated NAV on all of our vehicles that gave at least a management perspective on what assets were worth at any point in time.
And that makes me feel really good about this asset class, because I always get worried when, like with crypto, certain coins out there or whatever, like the only utility is the trading in and of itself. And that's when I get worried if there isn't like another use case for it, or it's all just predicated on something changing hands.
I think that's right. I mean, people love crypto because there's so much volatility involved with it. I mean, with art, the price of art does not, your opinion of the price of that Jackson Pollock painting does not change day to day, much less hour to hour. And it maybe changes quarter to quarter, more like year to year. So again, it makes for an asset that certainly is really best as a long-term capital appreciation asset. And the trading market is a great way to just seek interim liquidity if you need it.
Totally. I want to touch on scaling Masterworks, because you've been on a fun journey there. And I'm curious, from your position as a CFO, Nigel, how does the way that you run the org change when you're going from this stage of just finding product market fit, where you were in the beginning, to this place where you're leaning into actually new ways to grow and distribute the product?
Yeah, it's evolved significantly for sure. I mean, those early days, we were just trying to figure out, was there demand for what we were doing, period, right? I mean, we had a thesis that art was attractive to the broader investment community, but we weren't going to be sure until we'd actually tried it, right? So we spent probably the first year working with regulators on getting our initial structure approved. And we did a lot of kind of testing the waters marketing at the time. And we got pretty positive signals that we were onto something. And that was, nearly 5 years ago at this point. And now we've grown to where we are today. But what's had to evolve since then is, one, it's maturing systems. Absolutely. I mean, those first systems were designed really to help support that initial product market fit. So your initial backend is really just designed to manage an initial offering. I just want to make sure, okay, investors are coming in. Let me make sure I know who investors are, how much they pay. Great. But then you realize, okay, you're going to sell artwork. You got to make a disbursement. You got trading. Now you realize, oh man, I'm running a cap table. And then you back up again. You say, oh no, I'm running a fund administrator is what I'm doing. So we sort of have backed into that. And, the beauty of building the business, at least initially around self-directed investors, is we have we have a lot of flexibility in building that kind of ecosystem in-house. On the distribution side, or on the end customer side, the investor base has grown. And as I mentioned, while the self-directed investor segment is really like the SaaS correlations, our DTC segment has been our bread and butter. And that's probably what we're most well known for. A lot of people have seen, the Masterworks website and all that. That's really our DTC. And we know that playbook incredibly well. And that market was the beachhead market that let us prove out market fit. But the much broader pool of capital is outside of self-directed, and it's the advisor advised segments. You'll hear this, it's really called the wealth segment is what it's kind of referred to on the street. And that's a totally different playbook. And that's closer to enterprise sales, kind of where your buyer now is not your end user. You've got longer sales cycles, totally different financial rails, and where, some of the infrastructure that we've built to support our kind of walled garden on the DTC side has to evolve to be able to kind of plug into the conventional capital markets rails that support your kind of large investment advisor platforms. So over the course of the last couple of years, we built in partnership with another firm, very large asset management firm, a mutual fund actually that invests in all of our securities that then runs on those kind of more traditional capital markets rails and makes it then a possibility for any financial advisor who's then trying to put their client into a Masterworks product to come in through that mutual fund like product. But doing that required a lot of operational maturity. I mean, there was a note I sent around to the team a couple of years ago where like everyone's got to be ready for prime time, meaning like when you're just kind of doing things again in the walled garden, we can kind of set up things how we want, blah, blah, blah. But once your stakeholder base grows, your customer base grows, everyone needs to be ready for, higher level of outside scrutiny, SOC ready processes. And everyone, I think, had to really go above and beyond because, again, everyone's going to show up with the Thomas Crown Affair view of the market. And, it's going to be our job to be that much more thoughtful in the way we operate and construct a business.
That was an amazing explanation. Nigel, gearing towards a close, I'm going to take you into what we call our long-ass lightning round. So you're a successful guy, but I ask everybody that comes on the pod, you got to give me one thing you've screwed up in your career. Could be at this job or a different one.
Not spotting auto-renewals in contracts. That one really
I'm so glad you called this out. I don't think anyone on the pod in like 120 episodes has said that, and I've tripped over it multiple times.
Right. Everyone, I'm sure, gets very self-conscious over this question. And I did go back and listen to what some other folks had done. And I know you had someone that mentioned invoice fraud, and that we've had that.
Yeah, that person was brave. Yeah.
That we've seen that. But auto renewals and contracts. So the problem there is not having centralized ownership of contracts. So you get a staff member who signs up for something, right? There's an auto renew in it, and then the staff member departs or may say, oh, yeah, I canceled it. And then it's got an auto renew, and all of a sudden you're getting an extra bill, and then the finance team is having to deal with that. So the learning there was centralizing vendor contracts, harmonizing terms, removing standard returns, terms like auto renew. So we try and have a real playbook with all of our SaaS vendors.
Thanks for sharing that. A lot of people can relate.
Yeah.
If you could tell your younger self something knowing what you know today now, what would you tell them? I
tell the team all the time to embrace learning by doing. Action is the basis of knowledge, right? I mean, I tell the team, like, we've got to test things, and from that we're going to learn and repeat. And I think what I tell myself is, in order for that to really work, you got to have a lot of self-acceptance, because you're going to make mistakes. And I'm definitely a perfectionist, and the investment banking training drills in a level of perfectionism, certainly into me, that ultimately is massively detrimental to growth, actually. So the younger Nigel, it's go easy on yourself, trust your gut. Your journey, your ups and downs is all going to be part of the learning process itself.
It's like these two things are kind of in contradiction of one another, because you have to have the confidence to take shots that you've never taken before. Like the Dion Waiters effect. He's a guy in basketball who will just chuck it up from anywhere on the court. Doesn't matter if he's missed 32 straight shots, like he's taken the next one. But also having the ability to know when you have to be perfect on something, or just paying attention to the details. And it's like, how do you find the right mix of being willing to take those chances, but also like making sure that you don't screw things up? It's
really hard. And it was hard for me as hard as financial professionals, right? Because we're not in the move fast and break things business, no. Right? Certainly not. And that's not the expectation I have of our, controller when we're running the audit, that you need to get things done. One of the, just a tangent on that. I mean, Ray Dalio, I think, has one of his books, when you need something done accurately, like to the last cent, it's not about double checking, it's about double doing. Actually get someone to do it the second time. So we've had
Oh, that's a good tip. Like, actually go through the process again. Don't just check the output.
Correct. So double do, not just double check.
That's great. Thanks, Ray. I like his books, but I've never seen someone who was so rich that wanted me to buy his book so bad.
That's right. Last one I throw out there, though, I think, because it's thought of as no style points, right? There are no style points.
Say more about that.
again, these are the whole wealth of investment banking things I've had to unlearn in life. Get to the answer as quickly as possible and communicate it as effectively as possible. There is a lot of polishing and fussing over the quality of work product. That is important because I think that you have to present clear, cogent analysis, but do so to the point where you are communicating that effectively and not more. Right? There are no style points at the end of the game. So that's what I've had to teach myself.
Okay, though, one style point question: grid lines in Excel, yes or no?
No.
There we go. That was the correct
answer. There's only one.
Right answer is only. Nigel, can you walk me through your finance software stack? What tools does your team use to get the job done?
NetSuite for the GL, Ramp, man, we have drunk the Ramp Kool-Aid. Cards, AP, purchase orders, contract management, V2. I'm probably not doing myself a lot of favors for the renewal, but that's a great tool whose roadmap has really paralleled our use case. Numeric for the close, Redash, which is an open source tool that we use as a BI tool that queries our backend. Our backend's all kind of in Redshift. We have a few finance specific databases that support our payment operations, mostly in MySQL. Lots of Airtable. We're real super nerds around Airtable. Works pretty well for our use case. So in one case, we're managing an art collection, entities, and again, their feature roadmap paralleled with our needs pretty well. Retool for internal tooling. We've got a great finance team they've got this kind of hybrid tech and finance skill set. So we've got a lot of Alteryx, a little Python scripting.
Wow, on your finance team, that's badass.
Yeah, in the team, and it's the only way we've had to kind of glue together this whole kind of fund administration function.
Yeah,
that we've found. We're in Google Sheets world. I was a longtime Excel user, and I've become a convert. I mean, I think that the single best thing is I haven't seen a blue screen of death in probably 5 years. So, like the old days of like having, budget model version 25.
I got up to V147 one time, and it was so large that we would refresh it and then go to lunch and then come back.
I heard that. I definitely heard that. But guess what? Google Sheets can break. It is extremely difficult.
You did
it? I've done it. You basically have to have a massive conditional array formula that you like copy, write, and down over like 50,000 cells where you're forcing the whole thing to calculate all at once. And you've probably done this and that's the only time I will go and I will save a V2 of the model because I know this will break. So it can happen. Cube FP&A, we were one of their first beta users. Use Thomson Reuters for tax. On the banking side, we work very closely with Goldman Sachs Transaction Banking. They've been great. They've got a great virtual account product. JP Morgan as well. And then we've got a bunch of people we work with on the payment side too. So like Dawala for ACH payments, Plaid for account authorizations. And then, we built this cool local payment rail system with JP Morgan just recently that we were piloting. So if you're a customer in, paying in British pounds or euros, you can effectively send your money directly by bank in local currency, and it hits the FX API. And then we're really trying to help the funnel with those investors. So we're just piloting that now. So there's a little bit of tool sprawl, I'd say, on the payment operation side. I'd love to kind of consolidate that under the hood with kind of one or fewer tools over time. And then listen, AI is fast becoming part of the stack. Like I don't have any AI first tools, but we are constantly thinking about where we're using open AI models. Claude's actually become kind of probably my go-to among these models. And, we've used them for, scrubbing vendor lists, normalizing some data, but the use cases there are growing, and we definitely want to embed that, in our team.
That was one of the most thoughtful answers we've got for Rep Your Stack. So thank you. That was well prepared. Last one I got for you. What's the craziest thing you've ever had someone try to expense?
The good news is we've been really scrappy with expenses. We don't have an outside sales team. So our art acquisitions and sales teams are really the only ones with any real T&E spend.
Okay.
And And I'd rather see the T&E spend come through actually, because that way I know they're actually in front of people versus the opposite.
We've never had that answer. That's actually, that makes sense.
Yeah, I'd rather than a zero. Now, the reverse side of that is like, listen, if you're going to a fancy art fair, save your champagne bill for your collector you're buying, but you're taking the connecting flight there and you're staying in an Airbnb by the train station when you get there. So let's, so keep that on the radar. But we do a monthly session. I think I mentioned it at dinner the other week called Defend Your Spend. And it's basically our OpEx.
Yeah. Wait, I forgot to ask you about that.
Yeah. So we'll do it. It was actually just called the monthly OpEx review. And then one of our guys on the finance team then coined the term Defend Your Spend, where we'll go through a fine-tooth comb all of our vendor spend by category and owners for the whole team, and we'll go through what needs to be canceled and everything. And because it's amazing how the spend can pile up if you're not auditing it pretty regularly. And it's actually been, it's been helpful in actually discussions with a lot of my vendors saying, hey, if we see a renewal come up and it's going to increase the vendor spend for us, I go back to them in the negotiation and say, hey, listen, we have a big meeting where we're all looking at it and you're at the top of our Defend Your Spend meeting. And like, you don't want to be at the top of this list. But that's the time we get to highlight, a spend of the week. And usually if there's something that is kind of too bonkers or needs to be called out. And so maybe the craziest thing is not someone tried his expense, but did. I think the last one was we had someone who expensed $13 from 7-Eleven. And it was our head of our SDR team. And it had a memo, team lunch.
That's so sad.
So a round of applause for me on that one. I said, that was great. I'm going to build a whole expense policy around that one.
We got to end on that. They got them corn dogs at 7-Eleven. That's so sad. Nigel, this has been a blast. I love catching up with you, man. And we got to do this again.
All right. Hey, big kudos to you on what you're doing with the podcast and Substack. I love it. Keep it up. Keep crunching the numbs.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.